Good morning and welcome to this week's Elliott Wave Forex and Cryptocurrency Analysis webinar. Welcome all of you. I hope you all had a wonderful week. I had a great one myself and I'm excited about the next week. We've just concluded our course last week. It was great. It was an eye-opener. I think this nice thing about this course and why it is so popular and I'm getting positive feedback about it is it's very simple. Obviously, after you've understood the concept. And why is it simple? Because I do it simply and I just follow the basics. Once you understand the basics, everything just falls into place. And that's what we try to do. And we are not ignorant. We cover each and every aspect that needs to be covered. And you cannot afford to be ignorant. You cannot afford to ignore things just because you cannot understand them. When there's something that you don't understand, you study it and you understand it properly. Okay, so what is the wave theory based on? So I just want to touch up on this one before we get started. The wave theory is a theory, as you can hear. What is the difference between a theory and a theorem? Right. So I'm a mechanical engineer by profession. I'm a certified engineer. So the reason why I got interested in the wave theory is because it has been well researched, it has been documented, it has been supported by proof. So I've been taught to follow rules and formulas religiously. So when I found something that I could follow and just punch in like a calculator, I got very interested. So that's why I got interested in the wave theory. So as much as it's a good system, it's a good strategy, it is still a theory. And there's a difference between a theory and a theorem. Why am I talking about a theorem today? Okay, let's just talk about that one quickly before we get started. So the reason I'm talking about a theory is because a theory is a set of facts that have been proven to be true. So you don't negotiate on the theory. You cannot make adjustment on the theorem. You don't make adjustments. So for example, I'm going to give you a basic example of a theorem. Right, so there's a theorem that says the complementary angles of a right-angled triangles are complementary and they make up 180 degrees. So you already have this right angle, which is a 90 degrees, and these two angles are complementary, and the sum of these two angles should give you 90 degrees. 90 degrees. Why should they give you 90 degrees? Because this is already 90, and the sum of the angles in a triangle must be 180 degrees. Okay? You do not make any adjustments in this theorem. It is like that. It has been proven to be fact. It is also a fact that all total sum of all angles in a triangle is 180 degrees. No adjustments there. You cannot make any adjustments. However, with the theory, just to give you another example and just to remind you of your high school mathematics, college mathematics, you know the theory, the Pythagoras theorem that says if this is your A, this is your B, this is your C. The squares of the A of the side angles plus B square plus C. So no, not like that. And that's the reason why I'm trying to show you this. Is equals to C squared. So the square of the hypotenuse. So the square of this hypotenuse is equals to the sum of this one and this one. It has been proven. It is a fact. You don't make any adjustments. It will always be like that forever. However, with a theory is a set of ideas that have been accepted to be true based on the analysis, on the research, but it is not a fact. There can be new information that can result in the theory being adjusted. So that is why we've got the wave theory, that we have made adjustments to ensure that that theory makes the decisions for us. So that is the difference between the wave theory and all these other strategies. This has been well researched, it has been documented, and that's the kind of strategy that I want, a strategy that does not require me to make decisions. Okay? But the point that I'm trying to make is that there can always be new things that you can add onto the theory. if you do enough research, if you study enough, and it is supported by proof. You cannot just go and do stuff and that is not supported. Okay, so we're going to talk about that when we start with the analysis. These additional patterns that we keep discovering when we do our analysis. Okay, all right, so let's just talk a bit about the timestamps so I can help you guys. All the pairs that we are discussing here are time-stamped. Let me just give you an example for the benefit of those that are only just watching the video today. So this video may be about an hour and a half long, but you don't have to go through everything. So because I've made it easy for you to go back and refer so that you don't have to struggle and look around. Okay, let's do that. Right, so you see there's a tab that says show more. There's a tab that says show more. If you look at that tab, each and every pair has been time-stamped. So if you're looking for pound JPY, you just click on pound JPY and we go straight into pound JPY, and that's where you're going to find the analysis. Okay, all right. So for any other pair, they're all there. They're all there, linked. But I think this does not work on the mobile phone unless you've got some kind of an app that you can install. But on a mobile phone, the links are not active. So use that to refer back into your analysis. So that works really well. Right. So about the course, if anybody's interested about the course, we've just completed one on Friday. We're still carrying on this week again. So if you're interested about the course, send me an email. But just to give you briefly what we do, even if the next course is on the 7th to the 11th of May, right? So you don't have to wait for the 7th for May to get onto our premium group. You can join up at any time, because when you join, I give you a full course recording of the previous course. So that way you get started, you can start learning as soon as you can, as soon as possible. You know, as soon as you sign up, you get the videos, you start watching, you start learning. And then you become part of the premium group, you start asking questions, you start attending our daily webinars. So our daily mentorship webinars. So it becomes so easy. You don't have to wait. I mean, we are in a very fortunate generation where we are blessed with technology. So we are inundated with information, and things should work fairly well. You don't have to wait weeks or days to do things like attend the course and that. So the course is all fully packaged. Okay. Right, so let's get started with the analysis. Today I'm going to start a bit differently, and this is related to the intro that I just made about the theory and the theorem and the additional patterns that we keep discovering here. So I want to look at these two pairs. I've got USDJPY 240 and Bitcoin 240 charts on the screen. And as you can see that I've already marked this area here. So this pattern was very interesting to me because I had seen this previously happen on USDJPY in 2016, about 2 years ago. So it was very interesting for me to see that exact same pattern playing out. Let's look at this here. So this was after a big swing move from the upside coming down. And when this pattern happened here, we had a very big move to the upside. I'm going to reveal it now after we've discussed the one on Bitcoin. So similarly on Bitcoin, just last week. So this happened over 2 years ago, or just under 2 years ago. But this one has just happened recently, where after a big swing move, you get a 1, a 2, a 3, a 4. And this is not a triangle. A triangle is a 5-wave move. Okay? So this is not a triangle. So look at how these patterns play out. After the fourth move, you get this move up to the upside. You get this move to the upside. And this move is not over. So let's just show this with a bars pattern. You see this move has played out before. And I can just copy this move onto Bitcoin. So I'm going to copy this. and put it this side. Let's remove this so we can, our chart is not cluttered. Clean it up. Very interesting. Very interesting how this fits. And you can see in a different time cycle, we have this move that plays out exactly as previously. What happened with Bitcoin after that move? We had a sharp move to the upside. Right, so look how this fits in here. This blue is not move. That is a US dollar JPY move, but it fits snugly into this pattern here. Okay, so what happened with US dollar JPY after this move? That's what happened. We had a strong move to the upside. Similarly, Bitcoin, what are we expecting? We had the first impulse here. The impulse moved to the upside. What are we expecting? We're expecting a move up, right? But remember, just because we've got this pattern here, we're not just going to do a copy and paste. This has shown us that there is reversal here. You can call this a reversal pattern. We can give it a name, an equivalent in the market. Next time I'm going to show you another similar pattern like this that gives us a reversal. It's not a diagonal. Diagonal is a 5-wave move. Okay, and the diagonal breaks in the opposite direction. Okay, all right. So let's look at this one. So what did we say about Bitcoin last week? As much as we are expecting that move, remember what I said about Bitcoin? I said Bitcoin and all the other cryptocurrencies, I'm expecting them to have bearish moves. But we have got this reversal here. So it is telling us that it is now time to reverse. And we did say that it's going to retest this top. So we knew that Bitcoin needed to reverse. So when was it going to reverse? It reversed because it gave us a signal. What was the signal? It gave us a similar pattern that we've traded before. And it was not just the signal, it was also the structure, the sequence that we're following here. And if this is W, this is X, this whole thing here, actually, not like that. This whole thing here, if you remember the analysis last week on all the cryptos, we're expecting this whole move to be a big correction before we get a big move to the downside. So this has only gives reversal in this area. So that's why we are able to know reversal points because of these theories. Okay. All right. Just to answer whether it's economic data or shock news, the market always normalizes to what it's supposed to do. So the answers, we find them in the charts. So let's do the charts and see what we're gonna find. Okay. So this is what I wanted to show you about these patterns. And as we go along, keep watching all the other pairs. You will see that there's so many similarities between these pairs. Okay. Into our normal mode of operation. And we start now with Euro, US dollar, and the DXY. Okay, Euro US dollar, this on the top, and the DXY at the bottom. Okay. All answers are on the charts. All answers are on the chart. So we start the 240. Switch everything off. Okay, we're still in that correction. Still in that correction on the 4-hour. You know we've got a swing low to swing high. This is our swing high. Swing high to swing on the DXY. This is our swing low here. And start with this move 1, 2, 3. And that first move we're still looking at as an expanding flat. This is an expanding flat there. Okay, and looking at this correction here that is in the same direction as the trend as an X move. Okay, I've been saying for the last couple of weeks, about 5 weeks now, that we're looking for a big sideways correction. So how has the structure played out up to this stage? Initially, we thought we're going to have 1, 2, 3 here, and another 1, 2, 3 that is the same as that, and then we're going to go up. Okay, But in the correction, we keep trading every next move. So last week, I said you've got a 10 lot size trade here to the upside. This is what you got when we were here. We were here last week and you got this 100 pips move to the upside because of this V pattern. The V pattern is one of the patterns that we've also discovered that is very accurate. Very, very accurate. I think maybe we should change the name for V pattern to the 100 lot size trade. Okay. So now, how is it playing out? So what is playing out on Euro US dollar is the complete opposite on the DXY. So DXY will have this move here. Okay, so this one down, up, down, down, up. So also the X red 1, 2, 3 like that. Okay. Nice one, Abdi. Regardless of the name, all that matters is we make lots and lots of money out of it. Okay. Right. So what are we looking at now? We're looking at this as move down, but now there's this one here. I'm going to do this one with green now. We've got this, that, and there's a correction here. And I'm looking at this to do something like this. Maybe come back, do this, go up, give us this move, and another move like that before we get this move to the downside. All of this will not change the structure. The structure is still the first correction, which is an expanding flat. In here, we've got a zigzag, that is an X. And here you've got a 3-wave move, which we're going to call a Y. And if this plays out, that will be another good trade to the upside. Because this move, currently, this is not going down. It's not going down. This is going sideways. This is flat. Okay? Similar to the DXY, it's not giving you direction. It's going flat. And a flat move is a continuation move, it's a corrective move, it's going sideways. So we know that when this move is completed, we're going to get a move to the upside. Okay? So how do we trade now? Forecasted about 1, 2, 3, 4, 5, 6, 7 moves ahead. Okay? So what we know for sure is the next move. This is why we traded this move to the upside, and the last time we traded this move to the downside. Okay, so that's what we do within the correction until we get this big move to the upside, which we're going to be putting in more than one trades, maybe 5 trades running at any time here, because we would have established the trend. Right now, there's no trend, it's just going sideways. Okay, so let's just label this. Somebody said, I'm not labeling the charts as much, but I've never really labeled the charts. I'll just show you I just give you an indication of what we're looking at and the overall structure and and also the higher degree, because if we start labeling this internally, this is what's going to happen. Let me just give you an example of what's going to happen if we were to label each and everything. So this WXY on the outside, highest degree that we're looking at on the screen. So if we had to go internally, you're going to have to go with a different color, and that color will be inside here. Inside here, you're going to have a WXY as well. You see how time consuming this will be if I had to keep doing this in every way. I don't have time. I only have 1.5 hours. Okay. But as long as I can show you the overall picture, you can go and use your own strategy to trade this. So if we had to go even a degree lower than this, in here, you're going to have another WXY in the lower degree. In here, you're going to have another Y in the lower degree. Here, you're going to have another WXY in the lower degree, WXY in the lower degree, and so the sequence goes and the cycle goes. If you wanted to take it even further, you can even come here and put in WXY. So all these structures are building up to form this bigger one. So if you wanted to go lower, if you've got the overall structure and you're going lower, it's easier once you've got the cycle. So I cannot do that for each and every pair. There is labelings in the that is hidden here behind the charts, but we cannot go through that during this webinar. We only have 1.5 hours to go, about 30 to sometimes 40 charts. But I'm sure what I'm showing you here gives you a good indication of what we're looking at and how we're looking at these structures. Okay, so we are here now on the WX, the white WX. I think we're going to have a short move to the downside. Let's go look at it. We're getting a corrective structure here. we're going to have this, we may have this short move to the downside. So even if you're selling it here, even if you're selling this here, you may only be a short move. Okay, so you're going to need to move your stop to break even as soon as this reaches the same length as that. So let's go to the 1 hour and look at that one clearly. So I'm gonna remove the DXY because the DXY is doing exactly the inverse of what Euro US dollar is doing. So we're looking at Euro US dollar only now. And as you can see here on the Euro US dollar, you've got an impulse down. This is the latest swing. You've got an impulse down, and you've got this move here. You get this move here. You get this one here. Okay, so you're looking on the 1 hour. If you're looking closely here, this could be a corrective flag that could still push a little bit higher before we get the move to the down, okay, for this flag. So we need to wait for this structure here to complete. If you're going to sell this, if you're going to have any move to the downside, this structure needs to break to the downside. Okay, so that's what you're going to be looking at on Euro US dollar. Pound US dollar. So pound US dollar, let me show you the overall structure. Again, daily. If you want to understand the next move, you need to understand the whole structure. What have we been looking at this? A couple of weeks back, I showed you that this move, I'm looking at it as a 1, 2, 3, like that. And in between here, we've got a corrective running flat there. See there? And after that, we're looking at this move as a zigzag. It's a zigzag like that. So we were looking at this as a W. This move should be up to here. As a W, as a X, as a Y. Okay, what are we getting now? We're getting this move. Last time when I showed you this move, two things could happen. This could be an X, and then another, and then we're going to be looking for a Z. Okay, but this X could be this whole structure. So your X could be here, and then you go for Z. So we need to see when this comes to this level, what it's going to do, whether it's going to reverse. If it reverses, it does not mean the pound is going down. It's completing this structure. It's not going to go down from here, right? So it's just going to be completing this structure. And if it keeps going, it will still be fine because it's just going for a Z. If it keeps going from here, it means your X is here. If it comes back here, that means your X is here. But overall, the move is bullish. Okay, so let's look at the clues that we're going to get. We're going to look at this structure here. Pound is very interesting, especially pound US dollar at this stage. So I'm going to go 4 hour. By interesting, I mean clear structure. Okay, so this is the overall structure that we were looking at on US dollar, the 3-wave pullback, and we were looking for another 3-wave pullback to the upside. So we've got 1, we've got 2, we've got this one. As this one completed, we need to see if we keep getting corrections here, we take it back up to this level. We take it back up to that level. Okay. So if it clears and corrects above there, then you know that this is your X for it. Okay, you've got W, X, Y, X, Z. So this will have been your Y. That Y that we're speaking about now, this will have been your X. But even if this comes down first for this move, it will have just made this regular flat. So both possibilities we anticipate. It's not going to change the structure anyway. Okay, and we're not going to get confused because we're going to know what the structure looks like. Okay, so let's go to the 1 hour. So most of the time when people just see one move, when you look at the waves, you don't look at just one move. What move? Waves are cycles. They will go in cycles. They go in cycles. So this move to the downside does not mean it's completed. So if it's going to be a cycle, it needs to have a correction. So let's see if it gets a correction and goes down. And if it gets this move down, doesn't mean it's going down. It could just be a 3-wave pullback for the move that will go and retest that top that we're looking at. Okay, so that's what you're going to be looking at. Initially, we thought it was going to take this and reverse. It has tagged it. is this reversal? It will only be confirmed if this corrects, and then we come back down here. Okay, easy like that. So let's carry on with the rest. CAD. US dollar CAD, I mean, you have to love wave theory because it is so accurate. It is so accurate. What did we say last time? We said we've got the blue box here. So those who like labelings, those are your labelings. I don't want to confuse you with all those labelings. Because even when Elliott, the sequence that Elliott went through was not labeling first and identifying the structure. He identified the structures first. He named the structures. And after naming the structures, then he labeled them. Why did he label them? In order to relate all the degrees. That's all he was doing. So whenever you start with the labelings and putting in numbers there, you are going through the wrong sequence, and most likely you're going to be wrong. So you identify the structures first, name them, which structure are you looking for, and then you can start labeling them. And when you label it, it only becomes second nature. Okay, so let's get that off. So what did we have here? We had a 1, 2, 3 move here, a simple 1, 2, 3 zigzag move, and we said when it reaches here at equal legs, this is the equal legs. Let me show you the equal legs. This one here, if I project this one exactly as it is, and I project it where the next leg starts, you will see that it ends right here at the same length. Let's do it with blues. It ends right here where the equal legs is. So let's make it straight and not force it. Not one peep above, not a peep above, right there, and it reverses. So now we're in this reversal. Are we going to retest the bottom here? Need to see. So all these continuation patterns, you keep selling them. Let's just make it a bit bigger. And this is not a significant level. It is no longer part of the structure anymore, but this is a significant level. Why would that one be a part of why would this not be a significant level? Support and resistance traders will be looking for it to reverse around this area. This level does not mean anything. It's just part of this zigzag. Your zigzag start, this will be a significant level. Okay, so this could come back here. You may find that this does not even respect this because it's not about support and resistances. It's about waves. Okay, it's about waves and cycles. So the cycle here may end right back here, but it's not going to go in a straight line. You may get, at some point, you will get a bigger correction. So what do we have now? Let's look what we have. So you've got this cycle now. This is one correction. So you may get a correction that is similar in size with that one again before you get another move that will take you down. Okay. So for now, you keep selling the corrections. You're getting another one here right now. Okay. Let's just show you that blue box and where it sits. See where it sits between the 100% and 123.6. Very clear. Okay. You will see when you do EURCAD that we are not doing the blue box, but we're doing structure, and you'll see how structure is also respected. So cycles respect structure, they respect fibs. And we also cover fibs extensively in our course. And now when you understand where fibs come from and how to apply them correctly, then you can apply this correctly as well. So you've got this correction here. See if you get a move to the downside, impulse down, flag, you're getting continuation. Okay. But otherwise, you get a flag here, then you may get a 3-wave pullback. This is still very bearish. Right? US dollar chief. Okay. US dollar chief, if I'm just looking on the 4-hour, looks like it's still like another move to the upside because of this corrective flag. So it's still going to get a push, a bit of a push higher. But let's look at the overall structure where that comes from. Doesn't help. I just say the next move is up. You need to look at the whole structure. Okay, and if you're looking at the whole structure here, this is 1, and this looks like a 2. So this whole thing here looks like a call it a running flat. It's actually a running flat. So you've got 1, 2, 3 on this side, and then you've got 3 on this side, and then you've got 3 on this side. So this can just make a push higher for another 1 and another 1, and this would have made you a 1, 2, 3, and a 1, 2, 3. You see the degrees. So now when you label, you're following the degrees, you're relating the degrees. That's what you're doing. So just for the benefit of the gentleman who asked a lot of labelings, this will be your WXY. Why is it a W, and what is it representing? It is representing this 3-wave move. So that whole move is a W. A W is not a single wave, it's 3 waves. Okay, and if you like WXY in the lower degree, and not everything is a WXY, it is a WXY because the structure is a WXY. WXY. Okay, so we may get a push lower for another one. So can continue, and then this will then be your X. Only when this breaks to the downside will we look for downside on this pair. But for now, still bullish. You've got that flag over there. That flag is telling you one more up. Okay. Beauty of wave theory. Audi. Out of our famous V pattern. Showed you this V pattern even way before it started building up. See this one here in the lower degree. And now we're actually looking at 2. Okay, this is the one that we were looking at in the lower degree here. But there was this one here, the bigger one. But this bigger one, we disqualified it because it was not coming with divergence. There's no divergence there. It's just straight. But this one, we want our V pattern to come with divergence. See, this one has got divergence, the MACD. Okay. There's the stock RSI. We don't use the stock RSI for divergence. It's incorrect to use that. And we don't use it for that anyway. We use it to identify cycles and entry points. Okay, so look how that V pattern played out. Every time. How many times have we discussed V patterns? Almost every Sunday we talk about 3 or 4 V patterns that play out. Okay? So every time you're going to get connected until we break out here. So this may come back to the 50 back before we go up. So let's keep an eye on that one for now. That's the 4 hours. If I go to the 1 hour, so if I go to the 1 hour, it's telling you that you have an impulse and you've got this correction. So you need to sell when this correction plays out. So with all of this, you don't get married to these trades. A few pips in, strength is that one, move your stop to break even, take profits and get out. So because these moves are not going to be long. Okay, they're not going to be long term moves. All right, so looking at New Zealand. New Zealand, similar. Look at the V pattern, inverse V pattern. How many times do we talk about this pattern? This is the 10 lot or the 100 lots trade. Actually, this one could be a diagonal. No, it's not a diagonal. Does not tick the boxes. V pattern. Actually, that's your move and a pullback. Then you've got a 3-wave move. That's how V pattern plays out. Now you've got an impulse down. You're getting a coin, so you're gonna move. This move is not gonna go down forever, and it has this top. So just watch out for the move to the one side. Short, it's not gonna be long. You can just trail that stop. Okay, that's New Zealand. Let's look at US dollar ZAR. US dollar ZAR. Okay, next move is until you reach this level. And let me show you why I'm looking at US dollar ZAR like that. And we got it spot on now. US dollar ZAR and oil is one of the pairs that I can count with my fingers how many times I've lost a trade in them. Okay, so this is US dollar ZAR. Remember the swing high is somewhere that side, and this is our swing low. How was I looking at this the last couple of weeks? We were looking at this to be the start of the new move. So this started the move, and we looked at this move here as a corrective move and looked like an expanding flat. So I said we're looking for ZAR when we were about here to go and retest the 1215 area. That last time. Actually, I said 1230. I said 1230 because we wanted this length. You wanted 1230 because you wanted this length here. Let's just show that length. One. You wanted this length. That's where the 1230, 1215 came from. Okay, looks are there. My screen all of a sudden just got frozen. So let me try and, okay. I'm gonna use a single monitor. My secondary monitor has gotten frozen, but it's not gonna change anything. So let me just get into it. So hang on a second, guys. Let me just pause on Zoom so we don't make the video long. Oh, guys, I'm actually not recording on Zoom. I don't know what happened, but we're gonna use the video that is on YouTube. Okay, let me. Okay, Zoom was not recording. All right, so which screen can you guys see there? Just type on the chat box. Which screen can you see? Are you still seeing the chat screen? Excellent, excellent. Thank you. Right, so let's carry on. If you can see the chat screen, that's okay. I just realized that I'm not recording on Zoom, and nobody has complained on YouTube about the sound, so we should be okay. All right. So this is what we're looking at on US dollar ZAR. Okay. One monitor, I may just not see your comments on the screen, but just press raise hand if there's anything. So this is the move that we're looking at. Okay, I need to change the new share. Yeah, better. Okay, we've got it now. All right, so this is what we're looking at on US dollar ZAR. Let's make it a bit thick there. And clear there. Right, so this is the move. And in there, I was looking at this as an expanding flat. Already showed you this, expanding flat, and we're looking at this move around the 1230 area. Just project that move as it is, its size from here to that level. So this is why I was looking at that move to come around this level, around 1215, 1230. Okay, so now what is happening here? So we thought after this whole move, if I have to take this out now, after this move here, we are expecting that this move will continue to the downside, right? Because that will be a three-wave pullback. But it looks like this move is not done yet to the upside. Let's see what it's doing right now. Let's look at what US dollar ZAR is doing right now. You've got a 1, 2, 3 move to the downside. You've got a 1, 2. This move can come back here and retest the top. And if it's retesting the top, that it may even come back here for one and go. And that will be a regular flat. Where are we right now? Right now you are here and you've got what looks like a flag. So when that flag breaks to the upside, you're going to take this move and your target is going to be here initially. If it clears it, then you're in the trade to the upside and we're going to relook at what the new target is. But for now, you've got a simple short trade up to 1220, the previous high, which is 1216. Almost 9 out of 10 times, you're going to get this move to the upside. Okay. Okay, somebody saying they can't see anything on YouTube. Let me just check. Nothing on YouTube. What a pity. Okay, let's see here. Let me see what's happening on YouTube. Okay, is anybody having YouTube? Anybody having issues with YouTube? Okay, let's carry on. If you can see what is going on here, then that's fine. Let's carry on. Let's finish this one. All right, so that's the next move on US dollar ZAR up to 1220. Okay, so let me try to reshare the screen on YouTube. Thanks, Tux. Can you see the screen on YouTube? I think I've just shared it now. It should be okay, I hope. Great. All right. Thank you. Thanks. Right. So that's US dollar ZAR. Not a good day today. All right. Let's carry on to the yen pairs. US dollar JPY. US dollar JPY, very interesting. Very, very interesting structure that is starting to form. Right. So let's look at US dollar JPY. Every time you hear me say interesting, I mean the structure is very clear. So let's look at the overall structure, the daily. I show this structure every week, and that's so you guys can follow what we're doing and what the next move is and where the next move is based on. Okay, so we've got that impulse. If you remember this, the structure that I was showing you, that is similar to that of Bitcoin, that gave us a reversal signal for upside to get this move. So after that, we got this one correction in the middle there, and then this 1, 2, 3, 4, and then possible 5 that would have ended there with the diagonal. And internally here, you would have had another 1, 2, 3. So all of that, you see that this is a 3-wave move. So it's a W, X, and then a Y there. And you've got 3-wave move, and here, actually this one here should be in green. Should be in green, because you have to relate the degrees. The degrees needs to be the same, like that. So we're starting this move. Are we starting upside with this move? So let's go and have a look at that move, because if this is an impulse and this is a correction, somebody could have said ABC here. Okay, but we have to be strict with the labeling, because if you're saying ABC, then you're saying that you're defining the structure as different. So here you've got 3 waves. This cannot be an A. All right, so we are starting a move to the upside, and we're gonna go and look at this move and see what it is giving us. Okay, so after this, we're expecting that we're gonna get a move. We've been waiting for a move similar to this one. You can see this was over 2,000 pips to the upside. Okay, so we are expecting a similar move there. So let's see how this move is starting, and if it is actually the start of upside. So I'm gonna go into the 4-hour chart and just look at the start of this move and show you what I'm seeing there. What I'm seeing here, it looks like this move is starting with a leading diagonal. Let's do it with yellows. Yellow is more visible. If this is a leading diagonal, here, this is how this is going to play out. So this is the end of the string. This is the lowest of the string. So how do we label this? This will be a 1, this will be a 2. This will be a 1, 2, 3 move, which is a 3. This will be a 4. This will be a 5. We don't know if this 5 is completed here or if it's still going to make another one like this. Either way, we are going to get a break of this to the downside. And when we get a break of this to the downside, it will be a 3-wave structure, something like an A, B, C. And if that is the case, so what you are getting here is that first move, which would have started with a leading diagonal, would have been your wave 1 in purple. And your move here would have been a 2. And then we're going to start the wave 3 with a big impulse. So if we get a breakdown of this, it doesn't mean we're going down. It may just be giving us this corrective move here. May just be giving you this corrective move. And if we get this corrective move, we don't know what the structure is going to be as yet, but it's mostly just going to be a pullback, 3-wave move, and then we go. So that's what we're going to be waiting for if that happens. So let's see what happens. If this is a wave 5, completed here, a flag for downside. But either way, the downside move, you can take it short term, but we're going to be waiting for the big one to the upside if this is where we want it to go. So that's what we need to look at on USDJPY. Right, let's do the rest of the year and pairs. EURJPY. Yes, and no, you must just remember when I say I'm not interested in downside, you find that I'm not interested in 50 pips down. I'm not interested in 30 pips down. Maybe it's just a matter of preference. Somebody could be interested in 10, 20 pips. I'm not interested. Okay. It depends on the probability of that move. If it's a very high probability 50 pip move to the downside, I'll take it. Okay, but I mostly prefer the big moves. Okay. So when I say I'm not interested, that's just my preference. So it depends on your strategy and your trading style. Right, so EURJPY, this is what we discussed last week. We had this move we had here, and we had this move here. We had this corrective move here. So I said the next move is to go and retest the stop here. So we have retested it. We need to see if we're going to get a reversal here, because this is a 3-wave move for downside. The whole structure here is a 3-wave move. So you've got an impulsive move, you've got a 3-wave correction. So if you've got a correction, you need to go down. Okay, is this completed? We will see by getting a flag. See if we've already got an impulse down. So we need to see if we get a flag, even on the 1 hour, you take this flag, take it to the downside. We may get a very good trade to the downside. And why are we looking for that move to the downside? Let me show you again. I show you this every week. This is the move that we're looking for on euro. You've got a move up, a correction. You've got this move, and now we're looking for a correction similar to this one, something like this. So that's why I was looking for this to come and retest here so we can get a move to the downside. You see how we follow structure. So everything is following structure, and not only on the daily, from the historical analysis. So if we get this one here, this pullback, you may be getting a move to the downside. If you get this one, then we're going to look for a big one to the upside when this is complete. But that's still going to be a couple of days. As you can see, this is a daily chart. So for now, you're going to start selling the downside if we get those moves. Okay, so let's see how that plays out. In the 1 hour, you've got a move to the downside. Wait for a corrective flag to confirm. Actually, this does not look very impulsive, so that's why you need to get a clear correction. Okay, that's EURJPY, CHFJPY, and also a similar move. Had a similar move as well. We were looking for the same thing, was also here. We also wanted to come and tag this top. It has tagged, it has reversed in this case. So now we need to see where the next move is. So this one has already made a move down. It's making a move up. It still hasn't been corrected. It's making another move down. So you need to get a correction at some point. Whatever correction that you get is going to start giving you the structure. That can even do that. And you what you would have essentially is a 1, 2, 3 move to the upside and a 1, 2, 3 move wave pullback for upside. Something like this. It's a zigzag and a regular flat pullback. So, but right now you've got just impulsive moves without corrections. You see, look at this 5-wave move. Okay, this looks like a correction for this 5-wave move. And looks like you're gonna get another move to the downside here like that. So it can even be a 3-wave pullback like that for upside. Okay. Something like this. You've got 1, 2, 3. Now you're getting a 1. This can be a 1, 2, 3 move. 2, 3 like that. So after that 1, 2, 3, you expect to get another move. So this could be trending in 3 waves. Okay. And that will be a W, that will be an X, that will be a Y move. But right now, it's a bit unclear to focus this because it's just impulsive, impulsive, impulsive. You cannot work with just impulsive moves. So there needs to be a correction at some point. Okay. All right. Let's carry on with the rest of the yen pairs. AUD. Is making this move to the upside. This move, as much as it is corrective, it's fairly sharp. So what you wanna see here, if there's gonna be any continuation, you need to get a deeper correction like that, something that goes a bit sideways for this to make another move to the upside. Then that will be a clear correction. So you've got a bit of a reversal to the downside here, and that applies to the rest of the yen pairs. So that reversal, you saw all the yen pairs have got this move to the downside. So you just need to see if we're going to get this flex. And remember, you don't get married to these downsides. Take them short term and get out. Okay, that's Audi, New Zealand. Let's look at New Zealand JPY. Will be similar. New Zealand JPY. Similar. You see, we've got to move down. You need to get a flag. Okay, you will get this flex for downside. Okay, that's something that you need to attend the course for. We don't really have time to go into the theory right now. Okay. Unfortunately, we cannot cover that during these webinars. Right, those are the yen pairs. They're all doing the same thing. CAD also a move down. All the yen pairs look for flags for downside, short-term downside. And typically when you look for those downside, look for similar move as the initial impulses. Okay, when they break to the downsides, look for similar move, same size moves. They'll all give you that. Okay, CAD, as you can see, all of them doing the same thing. You've got this move. Right. Yes, all of them. Right, we're gonna do pound JPY when we do the pound pairs, but let's do silver and gold for now. Gold. Let's look at gold. So gold on the 1 hour looks like you've got this corrective move here, and you're gonna get short move to the upside. The rest of the structure, by short term, you're getting a correction for a move to the upside. Right. So looking at gold on the 4 hour is becoming a little bit complex, but the move is still the same as that of Euro US dollar. As you can see there, you've got a three-wave move to the downside, giving you what looks like a regular flat and another pullback in the same direction as the trend, giving you an X move. But right now, we need to understand what is going on here with this move. Because we wanted this move here to do this and come down. Will it still do that? Let's see. Let's look closely. If there's any sign, we're going to get on side. How are we looking at this? Let's look here. This is the 4 hour. So if we get this there, there, and over there, that will still be a big correction on that move. That will still give us this move to the downside. Okay, but we need to keep an eye. Otherwise, if this move here started upside, this is how we're gonna know. Right now, we won't know because it's still within. So this is how we're gonna know if this is going to start upside. So this will be a three-wave. This will be a three-wave move to the upside, and to get, we need to get. We're gonna look at this as a three-wave pullback. This as a three-wave move upside up, and then if that is the case, then this will go, because then this will be a W, a X, and then we start a trend side. Okay, so we're gonna look at this one here to be impulsive. Okay, so we're still within this correction, and if you look on the 1 hour, there's a short move to the upside. This is why I'm forecasting this. That's what I started analysis on gold for upside on this flag, based on this flag that you can take when it breaks to the upside. That's gold, and then silver. Silver, you can see also, it looks like it started with a leading diagonal, and now we're getting this flag here. We're going to get a move, next move to the upside. So we're going to be looking for upside on silver. Okay, so let's look for upside. Now we're going to go through the whole structure. We had an ending diagonal there, ended like that with a wave 5 that breaks out, three-wave pullback. That's why you may get this one to give us this. Can even come back for another one before it goes up. So that's how silver looks like now. Okay, so we've done the US dollar pairs, the yen pairs, silver, gold, and now at the pound pairs. Pound chief. Let's look at pound chief. So last time I compared pound chief, New Zealand US dollar. Let's do it again. Okay, so going with the theme of similar patterns from different pairs. This is what I showed you last week. Let's look at this again. New Zealand US dollar on the right hand side and pound chief on the left hand side. So New Zealand on the daily, I'm going to do New Zealand on the daily. We said we're looking at a similar structure than the Pengo on pound chief. Let's speed it so we can have more space. There we go. Excuse me. Right. I'm looking at pound chief for hour. It's going to be, this is very interesting. I like these kind of structures that just repeat themselves. All right, let's look at this structure. It's coming. It's just loading. Do it on the daily as well. Let's do pound chief. And you can see exactly what New Zealand US dollar has done. And there's a completely different pairs. There's no correlation whatever, but the structure is the same. If you look at New Zealand US dollar from here to there, I'm gonna take my and from here there and copy it on the side. Okay, so there, how this fits in here. So what I'm trying to show is move here. Okay, so I can actually on the right hand side now. So you see it here. So this is our bust pattern that we for New Zealand. Now we're projecting it on pound Swiss. So you can see we've got 1, 2, 3 pullback, impulse, 1, 2, 3 pullback, and now we're getting this move here. We got this move here on New Zealand US dollar. You had this move to the upside. This one has only completed this one. I don't know if you can see clearly, but let me switch off and show you with a annotation what I'm looking at. So look at this here. I think there's so much labeling there. So look at this 1, 2, and the 3-wave pullback. Impulse, 3-wave pullback. This one started with this first move, corrective move. So this one also has started this first move. See this corrective here. This whole move was corrective on this one. So this one has started with a corrective move and it made this move downside. This one, this move to the downside. Remember the one on the right, this one has not. So look what happened. It went up with impulse. This is what we're looking at last week when we discussed these patterns. It went up. See how it this move. If you look at not correlation, similar patterns. 100 people already. This. So now what you would expect here is that like some kind of a reversal there. Kind of reversal there. Would you expect this reversal complete? But this will need to, it's not just going to reverse like that. It may give a sort of a V pattern at the top, similar to what this did. You get a V pattern here before to the downside. So it may only after that level and move. Okay, last week on our pound chief, we're actually looking for it to take the previous high, and actually looking for it to take here and give us this move, but it did not give us this one. It just carried on. So this is how accurate you can be trading similar moves. But how do you trade these similar moves? It has to do with when looking at a chart. I just remember I saw something similar previous. Okay, so I compared the Bitcoin that is happening to with the USDJPY move that happened just over a year and a half ago. So let's look at this. So pound chief, possible correction, or it can end here with a V pattern for a move that, but that move that will be effective similar to what you get the last one, the upside. That that's what you're looking at. So this page, right? Really saying the only logo on YouTube. Is that the case again on YouTube? Only logo on YouTube. Can you guys see on YouTube? Looks like that. Let me get my chat on here. Is YouTube fine? How many people YouTube? Let's share it again. Now, is it better? Let's carry on. Let's carry on. Okay, let's carry on. I've only been recording for only half of the webinar, but what I will do is I'll do the first half and combine the videos. Okay, I'll do the first half and combine the videos. Don't worry. Great. Let's carry on. Pound chief. The pound chief is bullish. Any structure, keep buying it, and this is the daily. So look for in the lower time frame for thank you. All right. Look for correct structures in this for continuation. Any move to the active one and you don't get married to that move. Okay. All right. Pound chief, pound out. So pound out is also interesting, and look why this is interesting. Look at this structure that is happening now. This structure is something like this. This structure first before I show you that one. So now we'll be expecting that this, after the completion of this structure, another move to the upside, because when this one completed this structure, it made a move to the upside. So this is a corrective structure. It's not a move that is going down. It's corrective, and we're going to carry on with the move to the upside. So when you break out of here, you want to be in the buy. So you want to get a flag here for further upside. So this is going to be making new highs. So making new highs based on the structure. And this is the 4 hour. So let's look at it closely. Right. So this can be this corrective structure that can do that for another move, for this move, which is 1, 2, 3, 1, 2, 3, maybe down and then up. But for now, the closest move that you have here is this corrective structure that may come down first for one more before we get upside. Okay, but this move is not going down. It's not going down, it's going up. Okay, pound, New Zealand. Pound New Zealand. And again, another move that I've seen before on New Zealand. This correction there, and then a move down. So this is a 3-wave down and a 3-wave up. Two things happen here. Either we are done with this correction, we can be done, or it can be making an even bigger one. Right, so if we are done, this is how we're going to know. If you get a corrective flag, not just a flag, or just a corrective pattern, one of the Elliott Wave patterns that we've learned, then this is going to start a move to the upside. And this will be your W, X, Y. And then you start a trending move to the upside. If you're going to get continuation, what will you be looking at? Let me not do that. Let me not take that off. I'll just erase it. Okay, so if you are going to get a further continuation move, you'll be getting a move like that. That is another WXY. You see now I've labeled only the internals. So if you wanted to label Externally, these first three waves will be your W. So your W in purple is looking at these three waves. Your W in yellow is looking at this 1, 2, 3. Your X is looking at this 1, 2, 3. Your Y is looking at this 1, 2, 3. So that's where these degrees come from. So WX and then a Y. That is if this is still gonna be corrective going further. So either way, you're not going to miss any trade here because you're gonna get an indication entry point for whichever move it's gonna cause. It's gonna make. So if it's this one, you take it up. If it's this one to the downside, you're gonna get a flag. You're gonna take it down. Okay. The downside, you don't get married to. Upside, you pray you're gonna hold them. Move to break even and hold after you clear this level. Okay, so that's how pound New Zealand, how we can trade pound New Zealand. But this structure here looks like a regular flat. So most likely you may still get some downside, but we'll see if we get a flag market open. All right. So that's pound chief, pound New Zealand, pound CAD. Pound CAD. Also very corrective, this structure. Okay. But then you need to see here if you're going to get this like that. Regular flat. So if this is a regular flat, you're still going to get further downside, but all of this will just be correcting for further upside. So what are we looking at right now? If you're looking closely on the 1 hour, for you to confirm upside here, you need to get a clear impulse and a clear flag. Not something that looks like a flag, but a clear impulse and flag. Okay, you've got that correction here. If you wanted to take this, you should have taken it here on the break of this flag. But there's this move here to the upside. And this move that I'm talking about right now is only to complete this short regular flat here. This 1, this 2, this 3 here. So you can see that there is some sort of a continuation pattern there which you can take to that level, depending on your trading style and the number of pips that you usually target. Okay, so and lastly on the pound pairs is pound JPY. Pound JPY. So this thing started as a corrective move. When you look at the personality with the naked eye, this looked like it was making a corrective move. But now in hindsight, this looks like it was making a leading diagonal here. And if that's a leading diagonal, then this would have been your 3-wave pullback. And now you're getting this maybe 2B. Not very clear at this stage. AB move, AB, C. Okay, so this C does not look complete. So if it's gonna be complete, it needs to have a clear 3-wave pullback for a further move to the up. So where are we going if we get this 3-wave pullback, a deep 3-wave pullback? So let's look at it. Okay, so that would have been your A, B, your A being the leading diagonal, like that. So for us to come to that level, which we want to retest, we need to get a deeper correction. So remember, this is your first ABC. If we're going to get that deeper correction, your ABC now is a W, is a X, and then it's a Y that will go and retest this top, which is 1, 2, 3. Okay. All right. So now you're going to have your WXY. So if you get a deeper correction here on pound JPY, you're not going down, you're still going to retest the top. Why do we want to retest the top? Because it has happened before that after a diagonal, let's go 4 hour. After a diagonal, we always go back and retest. Not always, mostly. Okay, let's load this up. See here. And then that will be a flat correction. If we're going to get that move, then that means this will just be a sideways correction. So that's why we want this to come and take the top here at the top, at this previous high at least. See, so that was happening after the break of this diagonal. How many times have you seen diagonals that get broken and the B moves, comes and retest them? So that's what we're going to be looking at, a retest of this top at around 157. But you're not just going to go in a straight line. We need to get a deeper correction here. We're going to move up. Okay, so that's pound JPY. Now looking at the euro pairs, start with the EURCAD. EURCAD is also another one that follows structure very accurately. A little bit similar to, let's just get this one up. A bit similar to US dollar CAD. So let's go daily. If you remember, for the last couple of weeks that we traded this move to the upside, and we kept buying that move over 800 pips, just buying, because we wanted this move to come and retest this previous top. Why did we want that previous top? Because that was what the structure this is the structure that we were looking at. 1, 2, 3, 1, 2, 3. It came and retested not 1 pip higher than it and reversed. Similarly to what US dollar CAD did on the Fib 100% equal extension. So now we have this one reversing here, and this move is not short. This is a daily. It's a couple of 100 pips. That's from around 164, 163. Now it's around 155, almost 800 pips that it has moved. So now for there to be continuation, you need to get a deeper one when I move down. Okay. So if this is going to be an overall flat correction, this has to come back with an impulsive move to the downside. And that's lots and lots of pips to the downside. So we need to see how this one plays out. So let's look closely on the 4-hour chart, see how this is playing out here. Look out for clues. Doesn't go in a straight line. What looks like is happening right now is a V pattern. So you've got a move that moved down, but now you're getting a V pattern. Does this mean that the V pattern is going to reverse the whole move? Not necessarily. The V pattern can just be a 3-wave pullback. But this move is so probable that we can trade it as well. So it can be a 3-wave pullback for a further move to the downside. And that correction can even be something like this, a regular flat first. And it's even better when it's like this, because then you're going to get a bigger move to the downside. Okay. All right, so that is EURCAD, EURCHF. Let's look at the Euro New Zealand. Euro New Zealand, this is what we were looking at, and it's playing out to the pip. We're looking at this move here. 1, 2, 3. Now it was making this corrective move here. Okay, so it's a W, it's a X. So for this to be a Y, there needs to be a smaller degree. Can you see here the smaller degrees? This is why you need to follow the smaller degrees. You see you've got WXY, WXY. So you see I don't just draw these lines randomly. So here you can see that this sequence is not complete. It needs to have another WXY here. So you need to get a correction here. And even the structure is telling you that you may get a bounce, a 3-wave pullback or further downside. And when you're getting that downside, what are you getting? You're getting this 1, 2, 3, which is similar to that one. So here you're getting a V pattern that's telling you you're going to get a 3-wave bounce. So let's look at that V pattern. There, you already have an impulse move up, but you don't just take this one. If you want to buy this for short term, you wait for the flag, you're going to get this 1, 2, 3 move to the upside. Okay, this can even be something like that. So you need to wait for flag, take the short move. Similar sizing as this one. Straightforward like that. EURAUD. EURAUD, similar. We have impulse, not impulse, 3-wave down, 3-wave pullback, 3-wave down, and now we're getting this one here. If you need to go up, you need to get a corrective flag there for upside. And if you're looking at the lower degrees, 1, 2, 3, 1, 2, 3, 1, 2, 3. See, it's not forced. Everything is there. The degrees are there. It's just that it's not the 1, 2, 3, 4, 5 that most people are just put in the charts, even if it's not the right way to do it. Okay, so then that will be your W, that will be your X, that will be your Y. Internally, in the green, you're gonna have your W, you're gonna have your X, get a Y, WX, WXY, just like that. So get a flag, then you're gonna be looking for upside when this breaks this corrective structure. And if you remember, if you can refer to last week's analysis on EURAUD. EURAUD, I am still bullish long term. So whatever move it makes to the downside is only a 3-wave pullback. Okay, even if this is a 3-wave pullback. If you look at this one here, everything to the downside is 3-wave pullback, 3-wave pullbacks. So every time it makes those moves, we keep buying because we're looking at the overall structure, long-term upside. Long-term upside. So we are looking to go and retest the top. So you know you've got a trend, and it's so easy when you've got a trend. Every corrective structure, you keep buying until you get to this level. So we'll see when you get to that level. That's the target on EURAUD. Okay, EURCHF. So EURCHF looks like going to be bullish like the rest of the Euro pairs. If you remember, we said EURCHF and all the chief pairs were following the AUDJPY pattern, where this breaks to the downside. Look at this. This breaks to the downside, and then it comes back with a strong move to come and retest the top. But this has now cleared it. It looks like we're not going to get this one down. It's going to go, we're not going to get that one. So we just wait for the correction, and it's going to be just be making new highs. We're just going to be on new highs on EUROCHF. Okay. Euro pound. Let's look at Euro pound. I showed a bit of detail on Euro pound last week and what we're looking at. This still has not confirmed any downside as yet. We're still looking at this as a V pattern. It can only be downside after we've tagged at least this top. But right now, we need to get a move to the upside on pound, Euro pound. So we're going to wait for a move to the upside to come and retest the top here. So this is a V pattern. And this one has taken almost 6 months since September last year. We've been looking for this. Because when we saw it here at the top, we're thinking that after this move, we're just going to get a correction and then we're going to get to the downside. But this correction is in the same direction as the trend, so it's motive. Okay, it's a V pattern, so it will push up to the upside at one point. And if it does push up, this is the structure that you're going to be looking at. 1, 2, and then that will be a 3. Then it will go up with a 3-wave structure, goes back and retests, come back down and go up. So that will be a regular flat. Remember, a regular flat is a 3, 3, 3, and an impulse. If this becomes a 3, 3, 3, 3, then it's a WX. Sorry, not there. Then that will be a WXY. 3 waves there, 3 waves there, 3 waves there, then that will be a Y. If this is impulsive, then this is going to be an ABC move. Okay. So that's EURJPY, Euro pound. So Euro pound, what do you need to look out for? You need to look out for, I think there's an impulsive move up here on the lower time frame. Look at on the 1 hour. Well, not a convincing impulse, but you have an impulsive move up. And if you get this flag here, you take the trade to the upside. Okay, that's what you're going to be looking at on Euro pound. Okay. Let's look at some, those are all the Euro pairs. Let's look at some CAD pairs, New Zealand CAD. So there's a very nice trade that you'll find here on New Zealand CAD because we're looking at a V pattern there overall. And you are very likely to get a move to the upside here. So this with the straight lines like that. So V pattern, and usually this V pattern happens with strong divergence. Let's look at that. There is strong divergence there and there. Okay. It's making lower lows, lower lows. This will break to the upside. This will break to the upside. When it gets out of this channel, it will break to the upside. That will be, I don't know if it's going to happen next week or this coming trading session, but what we're going to do is we take this break out of this pattern. We take the trade there and we take it up back to that level. It will break to the upside. Okay. New Zealand, out in New Zealand. So out in New Zealand, we're loading that one up. So this is what we're looking at on out in New Zealand. We're looking for upside. And why are we looking for upside? We're looking at a number of things here. There's also a pattern that we're looking at, an advanced pattern that we're looking at. Let's load it up. And that is the pattern. Okay, I've taken it out. So your pattern is this one here that looks like a bad pattern. So we want it, we want this to push down. We want this to push down to the 88. Okay, but it is already at this level. So if it reverse, if there's a reversal, then this is how we're gonna know. Is this a reversal, this impulse that we have now? Or will it come back and touch the 88? Either way, doesn't matter. We're gonna know if this is the reversal, you get a flag, you buy it, then it's gone. Even if it still comes back and touches the 88, you're gonna be waiting for a move to buy. Right now, it has already made an impulse. A flag tells you that it is ready to go. Right? So before that, you had not gotten any impulse. There was no impulse to the upside. And even if there was impulse to the upside, you did not get a flag. This flag was for the downside. So that's what you need to look at on out in New Zealand. But overall, we are looking for upside when this, let's switch this off. We're looking for upside, and you can see the strong divergence as well. We're looking for upside when this is broken to the upside. When this breaks out of here, we'll be looking for buys. Look at the divergence. Look at the divergence. Very clear trade for upside pretty soon. All right. Let's look at, I think we can look at oil and the indices and Bitcoin. Oil. Okay, so oil, you've got we're looking at this structure here as a 1, 2, 3, not like that. A 1, a 2, 3, 4, 5, and then we're looking at this as an A, B, C. We're still looking at it like that. Last week we wanted this to break to the downside, But you can see that this down move, this B that we wanted, this C actually went down with a corrective structure. So this may be making a complex move. So we can still get something like this, a correction, and another one, giving you a WXY within the B. And then we break for C before we go to the upside. This looks too corrective to go up like that. Okay. So that's what you're going to be looking at with oil. With on the 1 hour, it looks like it's going to break to the downside. Looks like we've got a move that is slowing down. This is what you're getting here on oil. So we're going to wait for this to break to the downside for that move, for the C move. So when this goes down, it's going to be quite a number of pips to the downside because it's going to be going down to complete that structure, the ABC structure, this ABC structure that we're looking at here. Let's look at it again on the 4 hour. This ABC structure before it goes. So right now it has, but if it has cleared that, then this may have been all the correction and it will be ready to go. But I'm more inclined for this to come back down. Okay. That's oil. Now looking at the indices, last week we said short-term bullish moves on the indices. And these are the moves that we got. These are the moves that we got last week. Short-term moves. So what are we looking at now? On SNPY, on the S&P 500, looking to the current swings, you've got an impulse move up, you've got an impulse down, you get a correction here, you're gonna get a move down, you may get this for continuation move to the downside. Okay, so these moves to the upside may continue short term. We need to see if this wedge breaks to the downside for this move here. 3-wave move. Okay, that's S&P 500. The Nasdaq. So the rest of the indices were making these V patterns. We're making these V patterns. All of them were making the same patterns. That's why we said they're all going to break to the upside, and that's why we got these moves to the upside. Even though those moves were not very impulsive, but those are the moves that we wanted to see. So this can do this, and all of that can be a 3-wave pullback. So short-term moves, short-term down and upside. Overall, mostly bullish short-term up to this level, but this will still go to the downside because it's a 3-wave pullback. So on UK, it's the FTSE, UK 100 is clearer than the rest. So slow the UK 100. You see, that's the V pattern that we focused last week. Impulse down, V pattern, see. So it's an impulse, pullback, 1, 2, 3 waves. Go out, get a correction, you buy. Get a correction, you buy. You're getting another correction, you buy. This one is out of the V pattern, so it's bullish in the next week. Mostly, also you can say bullish most of the indices again. The indices again in the coming week. So look for corrective flex. Similarly here, we broke out of the V patterns. I think I've seen almost 10 V patterns over the course of this webinar. So you can see how prevalent they are. Correction, you buy, you keep buying. Okay. I don't think we are ready to go all the way yet, but for now we're gonna keep buying these short moves. Okay, that is Nikkei, DAX, same, exactly the same. Exactly the same. Short-term bullish moves. Every correction, you keep buying. All right. And then looking at Bitcoin, cryptocurrencies now. So the cryptocurrencies, let me just remind you of last week's analysis, what we're looking at. Last week we were looking at this as a 1, as a 2, as a 3, right? And then this as a, not that. And this whole structure that is forming here as a 3-wave pullback. This. So I said last week, wait for it to break to the upside. We are going to be targeting the 12,000, 13,000 area, but that doesn't mean that Bitcoin or the cryptocurrencies are back. As there's still this big concern that I have that after this correction, the cryptocurrencies may go down all the way back where they started, giving you this whole correction. Giving you this as a whole correction. Okay, so we'll be looking for this big move to the upside if it gives us an indication when we come to this level. So it's not looking good for the cryptocurrencies, but we are looking at this move. That may be the last upside that you get on the cryptos right now. So Litecoin is also similar. Litecoin is also similar. If you're looking at a Litecoin now, it's where's that Litecoin now? Litecoin. It will be exactly similar to Bitcoin. But we all of them were looking for bullish moves. 1, 2, 3. So we're looking for this move again on Litecoin. This one, see, it has already broken this one to the upside. So you're gonna get a flag. Every flag that you get here, we're taking it back, possibly to around the 260 area to make this structure. And also there, that may be the last move to the upside that you get. Okay? That may be the last move as well. So we're currently on the up, but don't get too comfortable, don't get too excited. That is not confirmation that we're ready to go. Okay? If you look at Ripple or Ethereum, Ethereum similar, 1, 2, 3 in this case, WXY. So WXY, let's do that with purple. 1, 2, 3. We've got this reversal here. So this is making an upside move. It could be making a correction like that. So this one, the correction may still come and do that before it goes down as well. Okay, but for now we're on this upside move, but not convincing that it is the total move that we're gonna get. Okay, got a 3-wave, it's got a 5-wave structure here as well. And lastly, Ripple. Ripple as well. All of them, you can see that all of them have made the impulsive move to the upside. So we're gonna be bullish for some time, but just be careful with those bullish moves. They are not the ones that will go. Retest here, we'll be making this structure. That's clear. Show the structure clearly. So this is the structure that you could be looking at. So this will need to come and retest the top. If it retests, you only have a 3-wave move for further downside back with where we started with the cryptocurrencies. Okay, so it's not looking good. Last moves to the upside, that's what I see with all the cryptocurrencies. Okay, not below 0, back to 0. All the cryptocurrencies, it looks like, according to the structure, we're gonna know when they retest these tops. All of them are going to retest these tops. If they retest these tops, we're gonna see making the moves down. Right now, there's no clear indication of any bullish moves. So I tried hard to look for bullish moves on the cryptocurrencies, and I can't see them. Okay. Thank you very much, guys, for attending. Apologies for those technical problems we had. So I'm going to try and combine the YouTube video. The first part of the YouTube video was okay, and the last part of Zoom. I actually forgot to press the record button on Zoom. I don't know what happened, but it's okay. Thanks, guys. Thank you very much for attending. Please like the videos. subscribe if you haven't already done so. Thank you. Cheers. Bye. You're welcome, guys. You're welcome. You're welcome. You're welcome. Yes, it will come up, Sean. So let me just get to edit these videos and post the proper videos, and I'll post you the videos. Your text is pinned to the top. Okay, cheers. Thanks, guys. See you. Glad you like it, David. Welcome, Udiri. Cheers. Bye-bye.